dealing with the pain is one of the big growth points for trading. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So today I thought we would tackle a question from a trader that sent this in. And the question was, like, if you could change anything about your trading, like wave a magic wand, change anything about your trading, what would it be? And he said, I would like to make profits every time. So I mean, it's a great answer, right? But I think it also kind of offers a little bit of insight into the psychology of this trader, which is normal, right? But I'm wondering what your thoughts are in terms of, like, what would you say if someone said that? Like, if you asked someone, anything you like, wave a magic wand, anything you wanted, anything you can do, wave a magic wand, change this thing about your trading, what would that thing be? And they say, I want to have profits every time. So what are your thoughts on that? If you hear that answer, what do you think?
Well, I mean, the answer I would give isn't probably what he wants to hear, but it just doesn't work like that, dude. You know, like, the markets don't work like that. Trading doesn't work like that. So you have to get your head around the fact that you're going to have to lose sometimes. You might lose quite a bit for a little while, and just to make it back later. I guess that's what people assume could be possible when they come into trading. So yeah, that's all I could say about that. But I think you had some thoughts on the psychology behind what this guy is saying, right?
Yeah, I mean, it's exactly what you're saying. It's the same thing. It's essentially that. So, like, if you said to someone, who's your perfect, like, wife? And they said, well, she would be like a Victoria's Secret model with a PhD in rocket science, whatever that degree is. And, she, comes from a billionaire family, and, and she gives me back massages every night or whatever. You know what I mean? Like, it's like kind of like, yeah, that's like, what they say about, like, if somebody like ticks off, 80% of the boxes, then marry them. You know what I mean? And it's the same with trading, isn't it? Like, it's the exact same thing, where it's like, if your system ticks off most of the boxes, you probably like, if it makes sense to you, it seems to be profitable, it fits with your lifestyle, it may not be like a 75% win rate, 3-to-1 risk to reward ratio, but it ticks off most of the boxes. And that's kind of, I think, a good way to look at it. So what this trader is letting us in on is the fact that he is focused a lot, and maybe solely or nearly all, on win rate. And the pain of losing is something he's trying to get away from. And what you and I are both saying, I think, is the same thing, which is dealing with the pain is one of the big growth points for trading. So understanding that you are going to lose is a part of the game. A casino understands that they're going to lose most of the time. So, for example, the money that goes through the slot machines, somewhere between, depending on the casino and where the casino is located in Vegas, somewhere between 95 and 98% of the money that passes through the slot machines, the pokies, as they call them here in Australia, because they're everywhere, that goes back to the people who are playing them. So the casino is only getting that small little percentage, right? But that's enough to build the casino, pay the employees, pay Siegfried and Roy or whatever comedian is there, and the stage and the lights, and you know what I mean? Like, that, all of that is paid for by that little tiny percentage that just keeps going through the machine. And it's the same with trading. If you can view trading like that and think, okay, I know, for example, I just put trades in on a system just before we started this. And I said, I'm so sorry, Hugh, I got to enter my trades in the strategy. That's a 52% win rate strategy. Okay. And the winners are bigger than the losers, but not by much, right? It's like, I don't know, 1.4 to 1 reward to risk ratio with a 52% win rate, something like that, right? It might be 1.6, but it's not 2. I know that. So, that's a very small edge, but the system makes money and I'm happy to do it. I'm really just testing it for a year, and we're 3/4 of the way through and it looks really good. But the thing is, if you have a lot of those little systems that have a little tiny edge, that's a big deal, right? And that's how hedge funds operate. They have a lot of different ways of doing it. So I would really try and convince this trader to approach it from a different way and say, instead of trying to put all your eggs in the winning basket and trying to win all the time and figure out how to do that, why don't you simply work on yourself and think about ways that you can deal with losing? Because the reality is, those traders who trade the no loss strategies, in a way, it's true. They are no loss strategies. They just win, 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 like the martingale, right? They win, 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 win. And then one day, because you don't take the loss, the trade goes against you so far that it ruins your account, right? And you may even actually end up owing your broker additional money in addition to the account money that you lost, right? So that's the reality of trading. And so, unfortunately, there are some really good strategies out there, but unfortunately, it's the no loss thing is a crazy road to go down. And I would work more on yourself. So that's kind of what I'm thinking. It sounds like you're pretty much thinking the same thing.
Oh yeah, totally. And I don't know about you, and maybe I'm sounding like an old person or whatever, but like when I was younger, like it seemed like more people were willing to kind of figure things out. And more nowadays, like based on the comments I get on some videos and some emails that I get, it seems like people just want the answer and they want it to work 100%. Like, it's like Uber, right? I want to order this car and I want it to show up 100% of the time. And I think a lot of things are being kind of spoon fed to society. So a certain percentage of the population expects things to be handed to them on a plate. And like we said, that doesn't work. It doesn't work like that in trading.
Yeah. And you can read all the interviews of the traders, and they'll tell you, and almost universally, you'll see the same pattern where they tried trading, they failed, maybe they failed again and again, and then finally they succeeded. Some of them they'll try trading, they'll fail. They usually like make some sort of risk mistake or psychology mistake, kind of intertwined with risk, and then they swear never to do it again, and they don't, right? So that is the way to go. I think the way to go is to do the old-fashioned way. And in fact, it's kind of weird because trading attracts people who want exactly what you were just saying. Like they want like the quick fix, right? It attracts that sort of mindset. But in the end, the only people who are standing years later are the people who are willing to work at it, right? Because the people who don't want to work at it, they've moved on to internet marketing or flipping houses, or you know what I mean? They're on to something else. They're no longer doing the trading thing, and they're doing the next thing, whatever, or Amazon drop shipping, or whatever. I don't know, whatever the hot thing is. So it's just, it seems on the outside like trading is a quick and easy way, but it's not really. It's just like anything else. I mean, there are great advantages of trading. I mean, I love it, but there are also there's a lot of work, sort of hidden work, that you don't see until you really get into it. So,
it seems easy. And if you get into those other things like real estate or drop shipping or whatever it is, I think ultimately at the end of the road, you realize, okay, this seemed a lot easier than it actually is. And you're going to have to actually do some work at the end of it. So I think it comes down to like, do you enjoy that work at the end of the road? And I think that if you're just looking for the quick buck, you're always going to be jumping around until you find that thing that you like to do. And then you'll go down the road and actually put in the time that you need to be successful. And I think another thing that came to mind was when I used to work at the hedge fund. It was interesting because I think people would be surprised at how little those guys made, like on a percentage basis. But then they were growing so fast. And I think at the end, they got to like a little over $1 billion or something under management, right? And, they were making like on the order of maybe 5% a year or something like that. And I was blown away how small that return was. But they just had a different model of trading the markets. And all they were looking for was like a risk adjusted return, right? Like a lower risk just to make this small gain. And then they would get these big amounts of money. So I think if you look at trading in different ways like that, I think you realize that, there are different ways to slice it to get, a pretty solid return, but not have a 100% return.
Yeah. It's so true. And there's so many things like tangled up in that. Like, like when you get big, how do you, how do you trade? How
Yeah.
do you impact the market? And then the costs associated with getting big, and all the different compliance and this and that, and all the all those associated things. It's really interesting. Like you're right. It's so interesting when you see that, because like most retail traders would blow away a lot of these funds, but and I think a lot of them don't realize that. But at the same time, a lot of these funds, they're dealing with other issues that retail traders never have to do, like impacting the market with their positions, that sort of thing, scaling in and scaling out, just so that they don't, ruin their profits. You know what I mean? Like, it's crazy. Like the whole game is different. In some ways, there was a trader that I knew who got me into trading, and he worked for a hedge fund. And you know what? It was so simple what they did. They also got busted. But okay, so people invested the money with the fund, right? This was in San Diego. And they invested with the fund, and then the fund would outsource all the money they gave to these traders in London who traded Forex, right? And that was it. And what the guy was trying to do is he's trying to bring my mentor in to do the trading, because it kind of cost, it was an expense, right? So these guys were only trying to make about 0.75% a week. That was their goal, right? In London. And so he had to pay them a percentage and all that. So it was weird. Like it almost is like the people who gave the money to the fund, I don't think they actually knew that all of their money was going into Forex. You know what I mean? I think that might have been sort of how they got busted, and how, the whole way the thing was structured was a bit weird, because it was a really lean operation, right? Like a couple of employees. Yeah, it was pretty dodge, but it was just interesting, seeing that approach, right? Because otherwise, like where you worked, you've got, I'm sure it was a pretty big organization, right? There's a lot going on
it
there.
got to be pretty big, but even like when I was there was only like maybe a dozen or so employees.
Yeah.
So
that's fair. Yeah.
Yes.
Yeah. Anyways, we digress, but interesting stories nonetheless.
Cool. Yeah. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.